We detected an unusual trade worth $42 million on Micron stock, ticker symbol MU. And it gets even better. Micron has earnings coming up on September 23rd, and the stock just hit a new high. So the big question is, will it continue breaking out to new highs or drop back down? According to technical analysis, the stock is very overbought, which could signal that it's due for a sell-off, pulling back down lower. But with this kind of momentum, it could just as easily keep climbing up higher. That's why technical analysis can often be confusing. And that's exactly why we also look at the real data to see what wealthy investors are actually doing with their money. So in this video, we'll analyze this unusual option activity to figure out whether this wealthy investor is bullish and buying, expecting the stock to move even higher, or bearish and selling, expecting the stock to drop lower. Because as we all know, the rich have more access to exclusive research and information, sometimes even leaked insider information, including potential access to earnings data before it's public, giving them an edge to make better, smarter financial decisions. This is how smart money always stays one step ahead, well before the rest of the market catches on. No wonder the rich get richer. And so, to level the playing field, let's dive into our analysis to gain insights from the rich so that our subscribers and members can profit from this deep knowledge too. Now, if you're in our membership, you've already started to profit from Micron stock. That's because we entered a trade position just a few days ago on this day, September 5th, when we first detected an unusual trade on Micron. So our members made fast money by getting in at the right time, riding it all the way up as it broke out to new highs. What makes it even more interesting is that just before the stock took off, a wealthy investor bought stock options in a very unusual way. Our system picked it up, and so we sent an alert through our membership. As you can see here, this was the email we sent to members, alerting them of unusual option activity detected on September 5th. And so we analyzed those unusual options in Micron stock and went long bullish when the stock was trading around $128 per share. Now it's trading at $150 per share. So even if you traded the stock instead of options, it's already highly profitable because we simply got in early. And so if you want to start getting access to these profitable trade alerts, including these email updates, consider joining the membership on our website. We'll put a link here. Keep in mind that if you join the membership through YouTube instead of through our website, we cannot email you these additional trade alerts because YouTube does not share your email address with us. So if you want more opportunities to profit, make sure to join the membership through our website, where you'll get full access to the trades of wealthy investors and potential insiders so you can see what the smart money is doing before the trade becomes highly profitable. Now, speaking of profits, how much did this options trade actually make? Because knowing the exact profit is what allowed us to use a smart risk management strategy and set up our next trade based on the new data of a $42 million unusual trade. So let's take a closer look at our trade, the same one made by this wealthy investor, these October 3rd options at the 135 strike calls. This investor bought 5,000 contracts at a price of $5.15 each. Since option prices are shown here and each option contract controls 100 shares of stock, to get the dollar value, we multiply by 100 or simply move the decimal 2 places to the right. That means each options contract costs $515. So how much return on investment did this deliver? Well, let's take a look at our trade using the risk profile graph, analyzing those October 3rd options at the 135 strike calls, which were priced at $515 per contract when we entered this trade. And so on this graph, our profit or loss shows up here, and the x-axis represents the share price of the stock, which is currently trading over here, and the y-axis represents the amount of profit or loss. Keep in mind, this graph already includes the cost of the trade. That's why you can see on the blue line that if the stock had dropped down, it would have been a negative $515 loss, the entire cost of the trade. But instead, it went higher to about here. So we have a profit of $1,561 per contract. And so to calculate the profit percentage, we take the profit of $1,561 and divide it by the initial cost of $515 and then multiply by 100 to express it as a percentage, and that gives us a return of 303% profit. In other words, we tripled our original investment on this trade. And so this is yet another real-time example of how we keep winning using data-driven analysis and trading strategies that track the trades of wealthy investors. So if you want to get access to deep insights like this, then just head over to our website. We'll put a link up here where you can see exactly which stocks wealthy investors are trading on Wall Street and when they're doing it, so that you can have the same opportunities as the rich. Because if the rich get richer, why shouldn't you? Now, with that being said, not all trades by wealthy investors are winners. Some end up as losses. Nobody wins on every trade. That's just the practical reality of trading. And so, to stay consistently profitable over the long run, we use strategies with a better risk-to-reward ratio to maximize profits and minimize losses. So as a real-time example, let's go over how we used new data to adjust our trade here into a strategy that gives us more upside potential while managing risk to limit losses. And so, first, we updated our trade for these October 3rd options at the 135 strike calls. Notice how these contracts are now worth around $1,900 compared to just $515 when we entered this trade. That's why it's very profitable now. And so we closed out of our 135 strike calls by selling them, locking in profits, and rolled into a new unusual trade that we just detected. As you can see here on the options time in sales tape, an unusual trade happened on September 11th at 12:29 p.m. at the 14-second mark for these November 21st options at the 140 strike calls. A quantity of 19,500 contracts were being traded at an options price of $21.75 or $2,175 per contract. And so we can calculate the total cost this wealthy investor spent by multiplying this price per contract, $2,175, by the total number of contracts traded, 19,500. And this equals a total trade cost of approximately $42 million for this unusual option activity. But keep in mind, the earnings report is coming up soon, so this trade carries more risk than the selective trades we share inside our membership. And so, if you want to get access to the lower risk trades with a higher probability of profit, then go to our website. We'll put a link up here. With that said, even though this trade carries higher risk, we still took it, but only because we locked in profits from our original trade using an options rolling strategy to reduce exposure and manage risk before earnings. As you can see here on the option chain, for the November 21st options, we rolled into this new position at the 140 strike calls from our previous position. POS stands for our position, and the green color indicates a buy position. And notice how there are 20,000 contracts opened here, showing strong interest and confirming that the 19,500 contracts from that wealthy investor were new opening trades, not closing trades. If a wealthy investor is closing out contracts, it could mean they're worried about the stock, so maybe it's not the right time for us to jump in. But when a wealthy investor is opening new contracts, that could signal an opportunity for us to enter a new trade. This is why we always take the extra step to verify the data at a deeper level. Many other websites and scanners simply report all high-volume unusual trades without filtering out closing trades. And that often leads to false signals, wrong results, and losses for those following unusual option activity. And that is why our deeper analysis gives us more winning trades than other websites. And in this case, we confirmed that this wealthy investor was opening new contracts. So that's why we used our profits from our original trade to buy these 140 strike call options. That means we entered this new trade at a lower cost, a smaller debit, reducing our risk by using gains from our earlier trade. And so when we analyze our trade now, you can see here on the risk profile graph, the buy position cancels out the sell position because they are the same October 3rd options at the 135 strike calls. So we are just left with the 140 strike calls that expire November 21st. And so on the graph, we can see that if Micron stock drops from where it is now, our trade would not have any negative loss unless it falls significantly lower. And even then, the loss would be small. This is how we manage risk, by minimizing losses while still staying in the trade to gain more profits if the stock moves higher. But remember, this strategy was only possible because we followed that wealthy investor early, back on this day, before the stock surged to a new high. So if you want to get access to our analysis and alerts, just like this one, before the stock took off, then sign up on our website. We'll put a link here. Because the next time a wealthy investor makes an unusual trade, you'll want to be in early, not chasing after it's already gone up. As always, please like, subscribe, and until next time, take care and have a wonderful day.